Question number 23 I have taken from RTP May 2020. Good question, exam type question. XYZ issued rupees 4,80,000, 4% redeemable preference share. If it is redeemable preference share, it means there is an obligation to redeem principal. Obligation to pay cash is a financial liability. 4% here means obligation to pay 4% every year. So it's a pure financial liability because we have two obligations. One is coupon payment at 4%, redemption at 4,80,000 on 1st April 2005 at par. Very good, at par. Be happy. If redemption is also at par, issue is also at par, then coupon rate and IRR will be same. No need to make a working note for that. Interest is paid annually in a year. The first payment of interest amounting to 19,200 was made on 31st March 2006. How they have got this 19,200? Just try 4% of 4,80,000. 19,000. So that is coupon payment. But they have treated it like an interest payment. Is it right? And is directly debited to retained earning by the accountant. Directly debited, how you can directly debit retained earning? Double mistake. Mistake 1, wrong amount. It should be based on effective interest rate. Second mistake, it should be routed through P&L account, not directly in the retained earning. It's a finance cost. In the last part of this chapter, we will see the presentation of interest on financial liability is always through profit and loss account, not directly to SOCI item. The preference shares are redeemable for a cash amount of 4,20,000 on 31st March 8. 7,20,000, huge premium. You raised 480, you are paying 720, huge premium of 2 lakh, how much? 40,000. So tell me whether your EIR will be more than 4 or less than 4. Lot more than 4% because the premium is huge. And then the institute have shown its kindness here. Effective rate is 18% per annum. Say thank you. Otherwise one working note you have to prepare. Thank you institute. Thank you Institute of Chartered Accountants of Bharat. Okay. Yes. Institute of Chartered Accountants of Bharat. Why we should carry the legacy of British Raj, right? But what will happen to my passport now? That also contains Republic of India issued passport. I have to surrender it. No, when you renew, then when I'll renew that time it will be changed. Yes. What about my Aadhaar card? That also contains Aadhaar card through the Aadhaar app. UIDAI. So will they change it? Through the Aadhaar app, that is their problem. Okay, I am not going to do anything. I am happy with the institute. It has given me 18% per annum. 18% of 4,80,000 should be interest expense. Can you please help me with this number? 86,400 should be the finance cost, and that should go to P&L account. The proceeds of the issue have been recorded within equity by the accountant, as this reflects the nature of the share. One more mistake. It should be shown as financial liability. They have put it as equity. So one rectification will be equity account debit 4,80,000 to financial liability 4,80,000. Okay. Then the next is, the board of directors intend to issue new equity share over the next 2 years to build up cash resources to redeem the preference shares. Mukesh, accounts manager of XYZ, has been told to review the accounting of aforesaid issue. CFO has asked Mukesh the closing balance of preference share at year end. If you were Mukesh, some students may be Mukesh only, how much balance you would have shown to CFO on the analysis of the stated issue? Prepare unnecessary adjusting journal entry. So you'll have to pass rectification entry also. Is it right? What will be the balance at the end? You will have opening balance 4,80,000 and plus you will add interest 86,400 minus actual coupon payment 19,200, 547. That should be my closing balance at the end of year 1. But this fellow, he has shown 4,80,000 in equity. He has shown 4,80,000 in the equity. So therefore we need to make adjustment entry. Is it right? We have to pass one rectification entry so that all figures will come at the proper place. P&L account should get a debit of finance cost 86,400. That amount which you have transferred to retained earnings should be reversed. Amount you have transferred to retained earnings should be reversed. Equity should be reversed, in its place financial liability should come. Any difference between the amount actually incurred, borrowing cost incurred, and the amount paid will be added to financial liability. You have paid 86,400, sorry, incurred, but paid only 19,200. So 67,200 should be added to the 4,80,000. That is what we have done here. Is it right? So all this rectification, in 12th standard they have taught you rectification of error, but not like this. Okay, not like this. So first you write down amortization schedule. Amortization schedule, why are we preparing? Just for fun, not really required, but this will help you to find the closing balance. Mukesh has to find out closing balance. On what date he has not mentioned, so we will calculate in all the years. At year end means only 1 year or all the 3 years? 1 year. But let us be little more charitable and do it for all the 3 years, because institute can have a different interpretation. So first year I have told you, second year 547,200 into 18% is how much? 98,496. Question is subject to interpretation of year end. Closing balance of the second year is how much? 626,496. 626,496. In last year what you do? Wait. Last year first you write this figure. I have to pay 7,20,000 plus coupon 19,200 to take 1,12,704 as balancing figure. Yes, 1,12,704. In case if they want 1 year or if they want 3 years, I am safe now. Is it right? Another note is, hence balance in preference share account on 31st March 2006 will be 547,200. It will be shown in the balance sheet as follows. It will be shown in the balance sheet as follows. You will write non-current liability, financial liability, borrowing 547,200. 547,200. This figure 547,200, because it will be closed at the end of third year. If you look at the next figure below that, it is actually higher than this figure. So your liability is actually going to increase next year. So nothing will come in current liability. Now write down its classification as equity is incorrect. Journal entry to rectify books of account. You want to pass one entry or 3-4 entries? One is enough. They have classified preference share capital as equity, which is what 11th, 12th, CPT, Foundation, BCom up to intermediate they teach you. MCom, PhD, Pune University also teach you. And all other universities in India. Am I right? But now preference share in this example, because there is an obligation to pay 4% every year and redeem on maturity 7,20,000, both components are liability, financial liability. So I will reverse that. I will record finance cost to be shown in P&L account. First year was 86,400. To preference share capital account, 547,200. 547, directly we can write what we want. If you write 480, there is nothing wrong. You have to pass one more entry. And then retained earning I have debited earlier. I will reverse it. Earlier it was debited, now credit. So retained earning back to its original position. So in this process what will happen? Automatically this figure will appear at 547,200. If you want to write 4,80,000 suppose, then again the difference between this amount and this amount you have to adjust in the 4% preference share capital financial liability only. So you want to write 2 times. How much was that? 60 something. This is also okay, but that looks very absurd. So you can adjust here only 2 times, one for this 480 and one for this difference. Is it right? Hello CA final student friends, we have come out with CA final FR regular video lecture in English language. You can purchase from our website vino.in. Along with the class notes, you will also be provided with summary chart and MCQ book. The price is only ₹5,999. You can purchase from our website. You will get 5-year validity also. So this is a very good opportunity to learn FR conceptually in detail. From our website you can purchase at 5,999 vino.in. Thank you very much.